Alrighty, folks, I see Barry's put the announcement in the main room. So we can kick off over here. Happy Monday to you all. As per usual, open forum here. I don't have any pre-done content. I depend on you folks to drive the content with your questions. So please get those in for me. Always best when you're driving the content so that we know what direction to go and what help you need with the software. Of course, if nobody is going to ask any questions, and I kind of have a silent theme going on here, I do my best to keep it informative and helpful in moving forward regarding the software. But as I said, it's best when you folks are asking the questions yourselves. The forum's open, the floor is open, the chat's open. So please go ahead and fire away any questions that you have for me. And give it a moment here and see what comes in. If not, maybe we'll take a tour back around the markets. Look at some of the things that are moving around today as far as that all is concerned. All right, so nothing coming in at the moment for me here. All right, let's start. We'll start with the top 10 here on the relative strength from the open race. And again, don't be afraid to interrupt me if you need. SAVE was our last winner, going to be our current winner. Take a look at this chart and see if it's noteworthy for anything. All right, so up 18 1/3%. It's good for 50 cents on a fairly low-priced stock here. Doesn't look like it was doing a whole lot here until about 10:20 or so Eastern time. And then it really kind of took off from there. And broke that $3, tested it, and just kind of marching on at this point. So earnings are a bit behind it. The chart's obviously in mostly a downtrend. Could we see a reversal from this bottom here? I suppose anything is possible, but not a really good looking chart, to be honest, as far as long-term looks go. But there it is nonetheless. Let's see if it's got any juice left in the tank to get above this level here. Clearly, that's a level of significance. We draw a line on that. I think it's going to be pretty obvious here. Yeah. So we can see here, on these big sell-off, on this big sell-off and accelerating down, support all through here. Now clearly looking to possibly be resistance. We'll see how that shakes out the rest of today. BCG. Let the details load there. So it's quite a move there. Let's see. So up 125% as of now. It was up well over that before. Real liquid. Lots of volume. But it doesn't look like that volume came in until later in the day, and then this thing just started skipping around, looking like a few halts on the upside. I don't believe it's halted to the downside. At least the chart doesn't show that it really has halted to the downside, but the thing really exploded. Certainly a tough trader there, but the spread isn't too bad. Now it's opened up a little bit, so 6 cents, 2 cents, 3 cents, 8 cents. So bouncing around a little bit there. But, so BCG, one of those things I'd be looking at here if I was considering the stock. You get the VWAP above it at $6. So, I don't know. Could someone want to play this for a 50-cent loss on the $4 and ride it up to the VWAP at 5 and change? Should it start to break back above this 450 level? I guess it's justifiable. Wouldn't be a strategy for me, but I could understand it. So there's a BCG AMPX. Again, folks, if anybody has questions, I'd much prefer it if you folks ask questions than me kind of just talk charts to you. It doesn't really it doesn't serve a lot of benefit to anybody at this point, right? So again, if you folks have questions, let's get those fired in here for me, please. That's the point of this format here. But AMPX grinding along on the day today, up for good for 26.5%, give or take. Again, a low price stock. Daily chart, it's come way down here. It's certainly reversed the last few months, grinding higher. But 80 million in the float, real low price stock. So kind of an interesting dynamic with that there. Obviously, positive reaction to earnings. You can see some areas of interest that are going to happen. It's kind of near that area now, and take some steps up towards these other areas going forward here. All right, there is ALGS next on the board. Big gap up for this thing, kind of giving it up at this point. I mean, yeah, plenty of volume and liquidity that we can see here, but it gapped up to here, traded down, really kind of just flopping around at this point. Clearly earnings behind it right there. Let's see what it can do from here. Get rid of those drawings. That's ALGS GDC. One of those stocks that's done the crazy here. A couple days back in August, it looks like, and just really kind of giving up from there. 11 million in the float, 11.5 million in the float. So not exactly a large float by any stretch of any imagination. Pretty liquid, pretty good volume today. And we can see, again, it didn't start off the day necessarily that way. Really kind of came into it, though it did gap up slightly. And really put that volume in here after 10 o'clock, it looks like. And just kind of running flat now at this point. So, it'd have some work to do, this area here and obviously this area here. So it would be one of those ones that I wouldn't be interested unless it was taking out high of the day, and it's going to have to take out high of the day with some good volume happening there for me to have any interest in that whatsoever. So it's GDCWRD. So newer issue stock out of China. Having itself a fairly wild day here. It's up 29%, which is good for $4.50 at the moment. Not a whole lot else to comment on this thing given the chart here. A $20 level obviously is going to loom big. It is not a liquid stock. There is not a lot of volume in that. So I wouldn't, I wouldn't be too up on this, to be honest, personally. That's the kind of thing where a bad rug pull could happen, and you could see this thing drop $2 in 2 or 3 minutes, literally. So that's going to be a hard pass as far as my interest would be. ABCL. Drawing here, and we can see again a slight gap up on it, but it had volume right off the bat, climbing up here, topping out. So, a lot of really low price stocks on this today. I'm not crazy about that for the winners. I like to see stuff. I really like to see stuff above $4, but I even more want to see it above $8, to be honest. Just a preference on my trading there. So plenty of liquidity, plenty of volume. See if it can't hold and maybe try to hook itself back up this way. $3 is obviously a bear for it here. So we'll see how that kind of shakes itself out as far as that goes. MAXN. I believe this had itself a bit of a moment here last week, or the week before last, I guess. Clearly, some reverse splits have been done with a lifetime high, looking ridiculous like that. The charts as well. Ridiculously small float. Earnings coming up in a couple of days. I think this is just a product of such a small float and some interest in it in these past days. I'm trying to relive these glory moments. Some traders there, perhaps some groups trying to pump up this price a little bit as well in their trading rooms. I know generally it's a bad idea to chase a stock. Have I missed a move if it's up 10, 12% for the day? Speaking of him specifically. So, I'm going to say something that seems to be very unpopular, but it's it's how it works is what does your trading plan say for, chasing, right? So a chart's a chart, whether we're looking at HIMS, gold or Bitcoin or whatever, right? So, in a case like this, now speaking strictly for myself, all right, we see this, massive move that's up here, right? And we see that this is a trouble area right here. We look at these areas where it seems to have some stalling going on as well. So the question is now, if it can hold the 28 level, can it get back and fight with this level? And if it gets above that level, can it get back and fight with this level? If it doesn't hold the 28 level, I think, it's pretty clear this next area down here is where we go. And then we really fall apart after that is how it works. So, I had a similar conundrum here last week. AAOI. I had a position in AAOI, and I sold earlier in the day, and I just kind of watched it go, and I just let it go because I couldn't, chase something that was up $5, $6, $7, $8. I couldn't. Again, it really comes back to what I was trying to illustrate here is how much money are you willing to risk versus how much money you believe you could make on this, right? And this isn't just like a hopeful thing. This is looking at levels and, likely if then scenarios. So, if this thing fails at the 28 level, which it's clearly doing now, you likely coming back here to 26.50, give or take, right? So now you're talking about giving up $1.75, right? Giving up $1.75 here to make $1 and change, $1.25. So, that's not a really good risk reward scenario as far as I'm concerned, especially on a stock that's up that much. We can say that, right? But then here's this IONQ. Just got some of these things off the top of my head right here. I mean, look at what IONQ has done day after day after day here for so long. And then this little sell-off and the thing just freaking rocket ships, right? And so there's no way to predict these things. The best you can do is say, what are the levels that I'm right and wrong? And do they make sense? Does it make sense that I'm risking money on those levels of right and wrong? That's really what you have to ask yourself at that point. As there is no, remember, stocks and the market can stay irrational longer than we can stay, solvent. So imagine someone that was short this thing, right? And, let's say they got short, here. They're like, this thing, it can't just keep this run. And then it keeps us run all these days, right? You'd be sitting through crazy pain thinking, this thing went from $10 to $15 in a couple of days, right? And then it does this here, almost $10 in 2 days, give or take. So, chase becomes subjective in that sense. I know it's probably not what you want to hear, and I know that's not probably as helpful as you hope it would be. But if you don't have a plan, then it is without a question a chase, regardless of the stock keeps going up with or without you. That's how that would work. So, all right. I hope that helps in some regard. Again, I know it's not going to be exactly what you're looking for, but anything is a chase when you don't have a plan. That's without a question. So, all right, let's all right. I'm glad you found that helpful. So, and just also for full disclosure, I was watching IONQ, and I was deciding between AAOI. This was a few weeks ago, and IONQ, and I decided to take AAOI. And of course, IONQ ripped, and AAOI went the opposite way. But I never got stopped out. I'm sitting there holding it and watching IONQ. And, my money for the trade was, for that swing trade was tied up, and of course, I'm kicking myself. And part of me is like, well, do I just sell and then chase IONQ? I'm like, that's not the plan. We cannot. I'm not going to break the plan. AAOI rewarded me, just took longer to reward me. Of course, I didn't take all the reward because I did not anticipate an $8 move in one day. But who does? So, and other questions, anybody with any questions at all, please keep those coming for me. I'd much rather answer questions than just kind of drone on talking to you all. So, all right, we did all these, right? ALGS, yeah, we talked about that. GDC, I know we talked about. WRD, we talked about. ADLC, SAVE. So we can see SAVE has now moved up the board here. It wasn't on the board at all, but it won 3 races, kind of continuing to grind higher into that level that we talked about there. MFH. I guess I got to click on it, huh? There we go. So that's a strange one. And why is it strange, Chris? Well, this is why. It gapped up. There's not exactly much volume on that gap up, right? And then it's kind of just chopped all around, and only recently did it have like all this volume come in. We got these topping and bottoming shadows happening here. Not a small float, 38.808 million in that float. Some liquidity to it now with all that volume that's coming recently, but I suspect this was not very liquid looking a few minutes ago. More than a few minutes ago, because we're going 5, 10, 15, 20, 20, half an hour ago, 40 minutes ago. Relative volume really probably shot up with this move in volume that was here as well. So not really my kind of cup of tea. I'm sure we could have had this doing this. And this isn't exactly a dynamically moving stock on a daily chart here, that's for sure. So, but noteworthy with it being up 55.8% to this point in the day anyways. MFH, saves, moved down. That's I just want to race, so it's moved these others down the leaderboard and everything else up. So I think the last one to cover is OUST. Another one gapped up a bit here. Took right off, gap and go, pulled back, touched 9, bounced nicely off of 9 right there. So probably one of the best looking charts of everything that we've looked at so far, to be honest. Understand why there's no data on the stock. It's not like it's a new stock. Oh, okay, there it is. That's so strange. And not exactly a new stock there, but anyways. With that said, I think it would be good if we draw a line at the top of this here and kind of look at some if-then scenarios on this stock. So $10 obviously looms big for it here. You got this gap to fill, and fill that gap somewhere into 11 and change. If it get up over this level, decent liquidity, decent volume here, about to crack 2 million shares on the day. 44 million in float, so not a large float, not small, but not large. Earnings behind it, clearly a positive reaction to earnings to this point. And so, yeah, this could be one of those ones. If we can get up above and hold this level here, might be something to consider. I mean, where do you play it off of? Do you play it, as a stop of the VWAP down here? Do you play it down to in this 950 level where clearly there was some interest and some fighting going on between the buyers and sellers? We could see that real clear right there if we move the line down to that. So these are things as a trader we'd have to ask ourselves is, where's my risk and where's my reward? Likely if-then scenarios. All right, so I believe that rounds out the top 10. Just looking to see if anything on the race right now. It's interesting. I mean, HUT, it's a Bitcoin play. Bitcoin, really broke out this weekend finally, up in the 80,000s now, I believe. I haven't looked at in hours. I'm guessing it's still up that high. So we can see Bitcoin plays that are, without a question, benefiting from that. I'm sure Riot. Riot's another one. MARA. Where's Mara? Mara will probably be another one that's doing that. CLSK. Is that one? CLSK. Yeah, I believe this is another Bitcoin beneficiary. Fairly certain this is, yeah. Yeah, this has some kind of Bitcoin relation to it. So it's, another one here, obviously another very positive reaction to what's going on with Bitcoin. So those that are been patient in those stocks and waiting for Bitcoin to be the catalyst for them, obviously being rewarded today. This does go back to, Don's question about the chase or not. And you have to ask yourself, has the move been made or is there more left in the move? If you believe the move has been made, why? What's your reason for it? If you believe there's more left in the move, again, why? What would be your reason for it? And these are things that are as important as anything to ask ourselves as traders. So, all right. And again, 20 plus minutes into this. If anybody has questions, don't be shy. Get those in for me, please. As I say, I cannot answer the questions that are not asked. What direction to go? Let me see here. I guess, let's see. Bear with me here for one moment, folks. All right. We did this plenty last week, but I just don't really know what else to do here. So we'll bring up the market, right? We'll bring up the SPY. SPY pierced 600. The S&P 500 is cleared 6,000. Generally speaking, when we get to these huge milestones, 300, 400, 500, 600, I don't think we've ever really just kind of blasted through them without, chopping around a bit. But I guess, why mess around here? Here's 500. And we took off through 500 pretty good. We bounced off at one time. We never saw 500 again. So, it's certainly within the realm of possibility that 600 could do the same. I mean, realistically, this is where we dance with 500 for about a week plus. We just grind higher off of it. We came back down below it. We didn't come back down below it much. And as a matter of fact, if I remember correctly, we only came down to like 490 something. We didn't even really go that much below 500. Let's scroll back and look at the tape here. Crack 500 here and come back below it here. Yeah, I thought it was 494, 493, 493.86. And once we got back above 500, we never saw 500 again. This big sell-off when it was all over and everybody needs to sell everything and hug your loved ones because the world's coming to an end. We didn't even see 500 again there. So, yeah, man. I wouldn't be surprised if we kind of just continue to do whatever we're doing right now. I get anybody out there that's pointing to the macro events and all that stuff like that. And, inflation still exists. It's just not going up as fast as it was. Believe me, I understand all those arguments, but the market obviously couldn't possibly care less about those arguments at this point. It's often pointed out. People need a reminder that the stock market is not the economy, and the economy is not the stock market. Stock market is a forward indicator, usually looking out in between 6 and 9 months. So no troubles on the horizon for the stock market, it would seem at this point anyways. How reliable is pre-market activity? It's extremely reliable. The one thing with our pre-market, the alert windows that could be an issue is there are a lot of what's called dark pool and late settlement prints. Basically, everybody removes them from their charts. They mostly happen in the pre and post market. Everybody removes them from their charts. We used to not remove them from our charts. We run into a problem where who's going to play dictator with the data, right? Because the data technically exists. These prints do exist. Even if they're way outside of market, the print actually happened. So, we had one group of users for years that were like, please remove these prints from the charts. And we had another group of users that said, please do not remove these prints from charts. We need them there. And so who do we, let's just pretend for 1 second we've got 100 users and 50 want it removed and 50 want it there. Well, what are we supposed to do? Well, the data exists, so we decided we're not going to mess with it. Over time, we got enough requests that we decided we would remove those prints from the charts, but we cannot remove them from our alert windows for new high or new pre-market high prints. The way the market data is derived and the fact that those prints do exist in the NBBO book, we cannot remove them. So that's the only thing that could ever get you hung up. So it's not that the data isn't reliable. The data is actually there. In fact, I would argue that our data is more reliable than anybody else in that regard, because other people are manipulating data essentially by fudging those prints and saying they don't exist when they in fact very much do exist. I'll leave that up to other people to argue. However, what you can do with an alert window so that you don't get tripped up by those prints is you can use outside market, or no, inside. Distance from inside market. And you could add that filter and you could put, what's the maximum from last print essentially that you want to see happen, and anything that goes that far outside of that print, you would never see it as an alert like that. So it's a tricky thing with data because people like to mess around with it and make it quote convenient, and that's not really the way data is supposed to work. As an indicator of trading days performance. So yeah, I mean the data, the volume you're going to see, and all those things like that. Those are going to be, those are all going to be accurate. The other thing I try to explain to people, because people get so caught up in pre-market trading, is the fact that you're going to have your groups of stocks like Apple and I don't know, NVIDIA, Google, Netflix, whatever, these huge mega caps, Microsoft, they're trading hundreds of thousands of shares in the pre-market every day. But they're not moving dynamically. You're only going to have in the pre-market 1, 2, 3, 4, 5, maybe on the craziest of all pre-market days, you might have like 10 dynamic pre-market movers, right? Like maybe on the craziest of days for the pre-market. Outside of that, you've only got a handful of stocks that are really moving in the pre-market with any significance. And so it could so easily be scanned with just a change from close sort and a minimum volume filter. So, what I would do for myself anyways, if I don't look at the pre-market at all, but what I would do is, we define price. What do we want that price to be? So we'd add that filter. Let's just say we want $1 is the floor, right? And then we could say volume. We gonna have shares here on volume. We'd add that filter and can say, what's the minimum amount of shares in the pre-market we want to see to get interested in? I don't know. If you want to catch something where it could be moving, early enough in the day, early enough in the pre-market. You're not waiting too long. I don't know. Is it 25,000? Is it 50,000? You got to kind of decide that. You're going to get some head fakes because you're going to have plenty of stocks that have traded, 1 to 50,000 shares in the pre-market that might be up, 3, 4, 5, 6%, but they trade that couple of shares and they're done. They're not moving any more than that. But, we could do something like that there. And then simply from there, I would change from close sort on a percent, and I would go sort by, right? And so we're changing on that. And then that's really it. I wouldn't really do anything more than that personally, because again, there's just not going to be that many stocks moving crazy dynamic in the pre-market, contrary to any popular belief. We can, history on top list isn't great, but let's do it anyways. Let's just go to 7:30. So 7:30 a.m. today. And, here's a snapshot of what this would have looked like here. So, you've got, how many of these stocks were really actionable on this list if we do it, ordering it by change from close, right? At this point in the day, something like this, right? EVO is up 17%, but it's traded 70,000 shares at that point. Was that really going to be actionable? 14% WGMI, 63,000 shares. How actionable was that going to be? You know what I mean? So you go through all these charts here, at that time of the day in the pre-market, that's what you would have been looking at there. So I'm sure there are people that have more dynamic scans for pre-market for different reasons and their technical analysis and wanting to see whatever they want to see. I'm not going to pretend like I know what they're doing. As someone who's really looking at price, volume, support, and resistance and distances from those supports and resistances that I believe exist, I don't need a whole lot of bells and whistles personally for the pre-market. And like I said, I don't really trade the pre-market anyway. So that's kind of what I would be looking at and doing there. With these gap up scenarios, is there a probability statistic of the direction of the move? No, there isn't. I mean, there's probably a number of studies out there, but I doubt any of the studies are done on just the gap up. Probably going to be, different technical indicators, volume and stuff like that are involved in all of them. So, because someone really going to do a study on stocks that have traded 100 shares but gapped up, I highly doubt it. But if they exist, any of these studies exist, we haven't done any of them. We're, a data provider in the sense of here's data points and, it's essentially here are all the tools and material, build your house type of thing is who we are. We're not digging into data in that sense. So good questions. Keep them coming if you have more, please. Keep them coming if you have more. You could also, again, I said you could build an alert window in the pre-market. So if you're going to do that, you got to make sure you're using filters that work and alerts that work in the pre-market. So you have to avoid relative volume that will block all data in the pre-market. You'll want a pre-market high. So pre-market high alert, we add that alert, put a check mark in there, we get rid of that, hide unused. And, one of the other alerts I encourage people making pre-market scans to use is 5-minute high, because sometimes something makes like a real early pre-market high, like, let's just say, just going to use this chart, for example, and if we were in pre-market, see something makes this big move and it shoots up to like $30 in the pre-market right off the bat. And then it falls down here to like 26 and it starts to make this like great climb back up, but you wouldn't get any alerts through here because you weren't taken out at a pre-market high. But with a 5-minute high alert, you could get alerts through here. So For my money, I think the 5-minute high alert is worth adding. If it's giving you too many alerts, then maybe you consider a 10-minute high or a 15-minute high. We've got those as well, so that might be something you want to consider as well. Just to not miss out on anything that, like I said, could have had some real massive gap up and then kind of give it up afterwards. And you're missing out on all that recovery that happens after that. So I think those two are good. You got to want a volume floor, right? Like I said before, what's your volume floor going to be? Is it, is it 15,000? Is it 25,000? It's 75,000. Everybody has a different number that they're not interested in the stock till it's traded X amount of shares. And while people probably have lots of similar ones, not everybody's going to be overlapping on that kind of item. So, but the difference between the top list and the alert windows here is the fact that the alert window is a time-stamped alert with the event. These selected alerts here, boom, this stock did this exact thing at this time that you asked me to look for, versus the top list here. This is just a rotation every few seconds of all the stocks that just meet the filter criteria, and they're ordered in a certain way based on that filter criteria, essentially. I see the multi-strategy window is printing more alerts compared to single alert window, even though the settings are same in both. Is there a difference in how the alerts? No, the only things that could change that is if you have the don't repeat function checked, or if there are more alert windows in the multi-window. The entire point of a multi-window is to have more than one alert in there, more than one alert window in there. It was really a space saver. So, load from cloud. Let's see if I can find a legit multi-window. The ever so popular high of day momentum. Don't repeat function will be, let me open an alert window here. Here's some template, some nonsense template I made. If you right click and look for properties, you will see don't repeat. Go ahead and click on that, and then you'll see don't repeat's either checked or unchecked. And then you have some different time frames you could select the don't repeat for. That's for the alert window. And let me find a multi-window here in my cloud. All right, so there's this multi-window here. I don't remember if the don't repeat's in here as well. And same thing, check if there's a check mark in it, and then if there is, what's the time frame on that? And that would be the only reason. If you have a multi-window that has just one alert window in it and the same alert window next to it, they will alert exactly the same. There will be no difference between them. There cannot be a difference between them. Excellent. Let me know if you need any more on that, or if you got that settled after you check those things out there. All right. See, I like it much better when we have questions. This is much more beneficial to everybody. I can talk charts and all that and whatnot, but how much relevance does it have to what everybody's trying to really accomplish here? So anyways, we did a bunch on the SPY, and if more questions come in, I'll stop on the market tour here. Look at the IWM again. And this continues to show some really, really big risk off. We're within shooting distance of the all-time high on the IWM now. 244.46. We're at 241.90. We cracked 242.30 earlier, almost 242.40 earlier. For those of you that are, really still trying to figure things out here, like me, because I'm still trying to figure things out. There's a saying, the real money's made in the waiting. It's not just the waiting to enter, but it's the waiting when you hold, right? What a move. But you were only getting that move if you had a plan that kept you in this, right? And it can't just be buy and randomly hold, because that doesn't make any sense whatsoever either. But, you know, you can't get these moves if you're not involved. That's how that works. And that's with any stock. Small caps, are really an indicator of risk on and risk off. I've been talking about this for many months now. I said how important this line was, and if we could really get up above and continue to hold it, it would indicate a risk on scenario for stocks, meaning it's more beneficial to hold when you're in the money than just sell and take that money. Clearly, we're seeing that case across the broad spectrum. I would also say that if you own stocks that are not going up over the last 3 months, you might want to reevaluate those positions. I'm not saying sell them. I'm saying reevaluate them, though, right? Are they poised and ready to make that move now to play catch up with the rest of the market? Or is there a reason they're not keeping up with the market, right? I'll give you an example. I own a whole bunch of the stock here, ABR, but it pays a very nice dividend. This thing hasn't done anything too crazy, right? It had this thing here where some kind of whatever report came out. That hurt me. That wasn't fun. But it's continued to grind itself higher, but it hasn't done anything dynamic. Still way above water. So I take the dividend, I reinvest it. I've owned this for a long time now. So, whatever I started with, obviously I have a lot more shares than that now with the reinvestment of the dividend. So that's a reassessment that I have done, though. Is the dividend payments now after all this time, is it worth holding this still, or should I be rotating into something else? And I decided it is worth holding still. I'll give you a flip side of one, though. I own this one, but not for a long time here. Not nearly as long, let me just say. I own this one from back here. Same scenario, pays a nice dividend, reinvesting the dividend. And I've started to ask myself now, is this worth owning anymore, or should I be rotating out of this into something else? And I am considering, if I don't see a positive movement in this, rotating into something else at this point. That's what I mean by reassessing. It isn't to take a knock at my position, right? I'm not knocking myself for it. I wouldn't knock anybody else for a position either. If it's a well thought out plan, plenty of well thought out plans don't execute well. I'm living proof of these things. But we do have to ask ourselves is, well, money here is tied up in this, and it's not doing what my plan had anticipated it doing to this point. So is that money best used elsewhere? And cut the loss of time at this point, right? So anyways, food for thought for anybody that's out there. And this is why I do like swing trading even more than day trading at this point for me. It's just more conducive also to my schedule. So, but, if we look at, a scan like this here in my evening scan, these are stocks that are up over the last 20 days, and then some other metrics in there too. It's a lot of stocks. And, I have a record count that's probably keeping this list, to about 100 stocks. I don't even need it to be that high. Kind of really don't need it to be that high. 50 is probably good, actually. Stop taking up resources that don't need to be taken up. But my point being is that the footprints in the sand, what we call price, is all that matters at the end of the day here. So, all right. Some good stuff has come in, some good stuff. So if you got any more for me, throw them questions in. I'm hanging around here for a little bit long before I shut the stream down. And, you folks would have to wander back over to Barry if you're still looking for some interaction throughout the day here. So, all right, just trying to think of what direction to go. Got this here. Sector analysis list. there's anything over the last 5 days that's really made a move. So we talked a lot last week about the regional banks and just the banks in general here. So we got the KRE representing our regional banks. I mean, this thing is really breaking out now. And, I know it's beating a broken horse or, beating a dead horse or whatever, but, this is where First Republic collapsed a few years ago, right? And we're here now. Clearly, the banking system didn't fall apart. There are probably hundreds, if not thousands, of people making thousands or 10,000s of YouTube videos daily and weekly about the financial system is going to collapse and it's all over and we're all going to lose our money and buy guns and canned goods and farm and whatever else. And I don't know if you need to be doing any of those things, but the financial system certainly did not collapse. It's certainly not going to collapse today, tomorrow, or for the rest of this year. Outside of some insane amount of bombs being dropped all over the entire planet. There's wars going on everywhere. There are people upset about all kinds of things. And, all the terrible things that have existed for all of humanity still exist right now. And in the face of all that, the U.S. banking system is pretty darn strong right now. According to these charts, price indicates people interested in these stocks. And we're not talking about just individual retail investors. We're talking about institutions, right? These big institutions are driving these huge, huge moves in the banking system right now. And you can be sure as the sun will rise tomorrow that they're not betting that money because they think this is all coming undone. KBE represents your overall banking sector here. Right, and the same kind of thing is going on. Where's the XLF in all this? There we go, XLF. This is going to represent your overall financial sector just in general. This thing is now broken out to new all-time highs again here. So again, just be careful, right? Just be careful about where you're consuming data from, where you're consuming information from. All right, the people that manage the most money in the world didn't get to those positions because they care what some random dude on YouTube or what the person on the 6 o'clock news or 10 o'clock news is telling them about literally anything. They got there because they did the work, the research, and built themselves into positions that they are at. That's how this whole thing works. What else is up over the last 5 days that's interesting here? I hate looking at natural gas, but we will. No, all right, that's just the one gap up today. XOP, interesting, I guess. XOP represents your oil and gas exploration stocks. And, this is tied to, my problem with energy is it's very tied to politics in general. And it's an area I do the best I can to stay out of in life in general, politics and policies. But they impact us daily and, can't escape them. But what I'd note here is this, looking at this chart, this is gapped up and into this area that's been resistance for so long. And while it's been able to pop over this resistance, got over it, came under it, got over it, came under it, got over it, came under it, got over it, came back under it. When can this break this glass ceiling and start to move up again? Can it ever? Can it? I don't know. Let's go to a weekly chart on this. And for full disclosure purposes, my finally success, let's call it, that I started to have at the very beginning of my successes in trading after years of getting my tail wiped all over the floor, was with energy stocks, actually. So I just, they're near and dear to me, but I haven't traded energy stocks much in the last couple of years because this is what's been going on over the last few years, right? Got this, massive move off the end of COVID here, and a great move. And then it's just been, psyched out a bunch since then. So clearly gas and oil aren't going anywhere anytime soon. There's obviously a lot of narrative and shift to move away from them. We'll see how that all plays out over time. And, it would be worth noting that those shifts away from it would be stocks like the Solars here, which have done absolutely nothing. But you do got to wonder at some point, does, some big player come along and say, all right, those solar stocks are real beat up for a real long time. Maybe it's time to start taking some positions in these. And no one will know until long after it's happened, right? Because these big institutions scale into positions very slowly over many weeks and months, right? It's not like over the last, 15 days, they've taken this, tens of millions of position, right? This happens over months of time that they slowly scale into it. Because if they don't, they would affect price, right? They drive the price higher. That's not what they want to do at that time. They want to get those positions and then let the rest of the crowd follow afterwards, drive that price up, and then they can unwind those positions as it's driven up like that. So that's how this game is played on the long term here. It is not to say there isn't room for day trading, because I do a little of that too. Where is PBW? There's PBW. So PBW represents clean energy fund in general. It's another one that's real beat up. But again, at what point do some of these alternatives get another shake? I don't want to say a fair shake, because I have no idea if the shake that they've had has been fair or not. I'm not smart enough to know those things. But just comparing and contrasting, what I would consider traditional energy to this point versus the clean energy that is out there. A couple of more minutes before I wrap this up for the day, folks. So if you have any burning questions, don't be shy. Throw those in. I haven't hit on this in a little bit. I've kind of taken them off my charts at this point. For a few weeks or month or two, whatever it was, I was using the Go No Go and the Trade Wave here. And I kind of have my own trading plan or whatever, so I'm not too, I'm not using these too much, to be honest. I did like them for a minute. It's neat to see on the charts. For, I need to do it on any stock. What I would say to anybody, though, that is still trying to figure out a trading plan, just consider that all trading is trend following, right? Whether you're on a 1 minute time frame or you're on a 1 month time frame for your bars or candlesticks or whatever that you're using, we're trend followers. We want to be as early as we can to the trend when it's moving in favor of our direction. We need to be out as early as we can when it stops moving in favor of our direction, whether that's to the long side or the short side, right? And so one thing you may want to consider, now TradeWave is available to any Trade Idea subscriber at this point. The Go No Go is not. It's an add-on, but you don't need the Go No Go with the Trade Wave. We could even just put Trade Wave on these here like this. Sorry, I'm just going to throw a Trade Wave here. We can leverage these to find possible trend changes, right? And start to maybe formulate some kind of trading plan on this. Part of what the Trade Wave is a cross, and it creates a cloud, an EMA cloud. And I just, I know people get very hung up on, these cross alerts are so great. I want to build a cross alert, but I want to show you what happens when you have something move sideways with crosses, right? So look at Apple, we buy in here and we sell back in here, and we buy again here and we sell again here, and we buy again here and we sell again here. And if you notice, we really just bought and sold in the same spot of that range where it just cross, right? And so what we can notice here from this is that there's no trend going on right now, right? There's no trend in Apple happening for a long time. The last time there was a trend was right in here. We had a bit of a trend down for a couple of weeks. That's all that was, right? Because here's July, here's August, right? So we just had a couple of weeks of trending down, and that was really, really it. Aside from that, trended up for a short moment here, but it wasn't a whole lot, right? So these can help kind of identify by sticking the crosses right in our face and looking for those trends, right? So, my point being is if you're still trying to figure this all out, much like myself, this may be a tool that could help you. Is it an end-all be-all? Buy blindly on this signal? Nope. There is no signal that works like that I know of anyways. But you could certainly leverage it to help build. Whoops. Oh, that's interesting. This is a stock that I've actually been watching for a long time. You can see it's on my like list here. Sorry, but the SPY here, having been in a nice uptrend for so long, it was a good illustrator of this here, right? You hit this buy signal down here on that cross, right? But we didn't need to get right in it then. Maybe we wait a minute, right? Let's come back here again, right? We say, all right, well, we got it, but we've been crossing and trending, not the right way for the bulls right now. Then all of a sudden we've got that happen here and we get this gap up and sideways move. And then we could say, all right, we are starting to trend up a little bit. We're not giving it up. And perhaps somewhere in this entry in these candles is a viable stop loss that makes sense. We can ride that trend afterwards. But you got to have the other parts of the equation. Where's the stop loss? Why is the stop loss? Where is the entry? Why is the entry? And that's how this all works. So again, I'm going to give you guys another moment here, and I'll begin to shift you all back to Barry. Let's see, it's 12:55 now. Anything else happen in this scan since we were talking about it? Nope, still all the same top 10 ones here. Everything looks about the same. PGY, well, it doesn't look like it's on the top 10 winners, but I feel like I saw it a lot. Take a look at this before we part ways here. So yeah, having itself a day, 5.2 million shares traded, 5.79 on that relative volume. Gap up and go. So that's interesting. Long exit, long entry. That's interesting. On a 5-minute chart, we didn't get an entry on this yet for the trade wave. I find that interesting. What about on a 15-minute chart? On a 15-minute chart, the last time we got an entry was way back here, keeping us in this whole way. So just interesting stuff. Interesting. Let's keep swapping to short from long, and I want it on long. There we go. All right, so I guess that'll wrap it. There's no other questions coming in here, folks. So I do thank you for coming and joining me for the hour today. Those that enjoyed this, we'll do it again tomorrow. You get me again tomorrow. Parting thought I like to leave everybody with is, have a plan. If you don't have a plan, you shouldn't be pressing buy. That's all there is to it. It's trading doesn't have to be complicated, but it definitely has to be well thought out and well planned and tested. And if it's not any of those things, it's not trading. That's just kind of the way it works as far as that all goes. So, all right. I thank you again, folks. Going to go and shut down. And feel free to join Barry back on the other side. I'm sure he's about to come out of his break any moment if he hasn't already. And we'll do this all again tomorrow. All right. Have a great rest of your Monday, everybody. Take care. Bye-bye.